Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is the 5th of October, 2023. It's a beautiful Thursday afternoon. We have a great guest for you today, Anthony Zhang. He's the CEO and co-founder of Vinovest, which offers up investments into an alternative asset class for the average investor. You don't have to be accredited, you don't have to be wealthy, into investing in wine and whiskey. I know it sounds a little crazy, folks, but when you look at historical returns of both wine and whiskey over the last 10 years, both have beat the S&P 500. Low correlation, offers diversification. And I gotta tell you, the wealthy have been doing this for a very long time. So let's dive into this and find out the opportunities here with Anthony Zhang. Do you own one of America's 7 most dangerous stocks? These 7 stocks have been on a tear this year, driving about 75% of all the gains the S&P 500 has seen in the first half of 2023, and leaving the other 493 in the dust. But here's what most folks don't know. Owning even one of these stocks could be a dangerous mistake. That's because what's around the corner for the stock market could catch you off guard. It's a distinct pattern that happens roughly every 10 to 12 years. And each time, it opens a rare window in the stock market where investors stand to create or lose huge amounts of wealth. Right now, it's on the verge of happening again. We put everything you need to know, including the names of these 7 stocks, in a new report we'd like to send you today for free. Get the facts yourself. Go to 7stocksreport.com to get your free copy. You can get the full list of the 7 most dangerous stocks and prepare for what's coming. Again, that's 7stocksreport.com for a free copy of our new report. All right, folks, here he is, Anthony Zhang, co-founder, CEO of Vinovest. This is a topic that I must say it's close to my heart, but I'm a wine aficionado. I was brought up, Anthony, you may cringe at this. I was brought up drinking box wine, so I definitely don't have the palate of most people.
Yeah, we've all been there.
I enjoy a nice wine. Yeah, I enjoy a nice wine. We got the dinner. So, Anthony, thanks so much for joining us here today, Making Money for the first time. And also, I'll be seeing you in a few weeks at the Stansberry conference out in Vegas. We'll talk about that a little bit. But Let's just jump into this. What is Vinovest?
Yeah, thanks for having me on, Matt. And excited to have our team out at the Stansberry conference for the first time as well in a few short weeks. So Vinovest is a way to invest in wine and spirits as an alternative asset. So in the same way that you see platforms out there enabling greater access to real estate investing or art investing, we allow the same thing into appreciating bottles and barrels of whiskey and wine. And we handle everything from the sourcing, the diligence, investor education, as well as storage and eventual liquidity down the line.
Well, you said something there. I'm going to touch on it in a little bit more about the company, but liquidity. But make sure I'm going to definitely come back to that. When I think of investing in wine in particular, I remember I had an uncle who passed away back in the day. After Vietnam, he started buying wine futures and all kinds of fancy stuff out of Europe. I think most of it was like French wine. And I remember going over his house with all this wine cellars, beautiful wine. I didn't know what the hell I was looking at. I was younger. But I always felt, to me, that was for wealthy people. So what made you start this and offer it to those non-wealthy people that aren't buying wine futures?
Yeah, I think you're absolutely right in that investing in wine, whiskey, watches, a lot of these sort of luxury asset classes, so to say, has really traditionally only been available to wealthier folks, right? And they're all very quality assets. And when I first came across this asset class, I wasn't wealthy. I wasn't a wine or whiskey expert. I didn't have the space to be able to carve out a huge, beautiful wine cellar like your uncle does. And I still wanted access to it with the return profile and the lack of correlation to equities. I thought it was really attractive, but didn't really find any solution out there that offered just an everyday person like me the ability to be able to effectively deploy capital into the space. And I thought I could build a solution, and that's what Vinovest is.
So when did you launch Vinovest originally?
Vinovest was founded about 4 years ago in 2019. Okay. And at that point, I'd been collecting wines and whiskeys on my own for about 3 years. So I'd pretty much tried every single solution under the sun, from working with brokers to going to auctions to working with other wine and whiskey investment houses, and was just never really satisfied with the investor experience.
So when you did this, what made you get into? Were you somebody who enjoys high end wine, or somebody who enjoys a nice whiskey that you can't find, and you thought, why not invest in it? Or did you go simply from the investing side, thinking, well, this is an asset class that has been historically diversified away from natural, normal U.S. equities, not a big correlation there. What really drove you to actually start this company to invest in it?
Well, like you, I certainly do enjoy a nice glass here and there, but it really was an article, I believe, on the Wall Street Journal that was talking about these exotic asset classes that the ultra wealthy were investing in. And, they had things like Birkin bags, expensive watches, pieces of art, and they had all outperformed the S&P 500 over the past 15 years. And I was like, wow, I don't really understand, Birkin bags or super fancy watches. It kind of seemed to me like just purely a supply and demand market play. But with wines and whiskeys, I understood that they actually change in flavor as they age, right? So there was some sort of inherent appreciation of the asset class, and they actually do get consumed. So that supply year after year does go down, right? Of course, people can intentionally destroy a bag or a watch to bring the supply down. But in the wine and whiskey world, that's a natural part of the market, right? Consumption is where the eventual liquidity goes, which keeps a really strong price floor as those wines and whiskeys mature. So to me, from a fundamental standpoint, it just made sense. And then along the way, became much more obsessed with the drinking side of it as well.
So what are the average returns over whatever time frame that you guys track for, let's say, your wines, when you look at the wine as an asset class?
So over the last decade, wine has returned around 10, 11% a year, whereas whiskey has been closer to 16% a year.
Wow. And then the S&P is going to be probably around 9 in there. I'm just doing some math in my head.
Yeah, historically S&P, if you include dividends, it's been closer to 9-ish%, right? And It's been pretty steady, even in including those cycles over the past few decades. So it's comparable, right? It's got strong returns, but I think perhaps the most attractive thing to me was that diversification asset. Right? There's many assets that can give you similar level returns, maybe not as high, but it's low volatility, about a third the volatility of the equities market, and it doesn't really go down when the market goes down, right? Because of that natural consumption of the market that always keeps the supply getting lower and lower.
Well, heck, we all know during COVID, when the market got crushed for about 5 weeks, that the consumption of alcohol went the exact opposite way. Everybody was stuck in their damn homes and drinking too much, or bars were open for the last few days and went and drank a lot. So, yeah, I mean, you got to love an asset class that when times are bad, the consumption increases. And that's, fortunately or unfortunately, however you look at it, that is alcohol and vice assets, if you will, at that level. So is this open to all investors or only accredited investors?
Vinovest is open to all investors worldwide. And all you need to do is be old enough to consume the alcohol, because you're buying into the actual underlying asset and not a securitized or fractionalized pool or anything like that.
So let me ask you, so say, okay, somebody has $5,000, let's say, or whatever the entry level is, say it's $2,000, and they want to invest in wine. Do they own a pool of it, or do they have their actually own case in their bottles that they actually own?
It's the latter. So you own the entire case, entire barrel. You know exactly what you own as well. So say you buy into a barrel of whiskey, we'll tell you the exact mash bill, the exact serial number of the cask, even where it is. And that enables the folks who are those whiskey enthusiasts, at the end of the day, you could actually drink your asset if you wanted to. You don't have to just sell it. And I think by retaining that, it also enables you and us to be able to connect with the consumption side of the market. And there's where a big part of the liquidity eventually comes from.
Yeah, because I mean, there's other asset classes out there like this, and even in the stock market where money's pulled together, and you don't actually know what you own. You own a piece of something, let's say. Mm-hmm. So it's very difficult to sell, because it's tough to sell a piece of something you don't really know. It's just this big collection of whether it be watches or wine or Birkin bags. You don't actually own that. So I like the way you have it set up, where you own this case of wine or these cases of wine, this cask or barrel of whiskey. So tell me a little about the whiskey, because the wine, that didn't surprise me. Hearing that people are obviously investing in wine, but whiskey kind of it caught my attention, and I'll tell you why. I did live in Nashville for a couple of years. I used to date a girl from Kentucky, so I learned a lot about whiskey being down there. Being a Scots-Irishman, I know a lot about Scotch. So it's kind of my wheelhouse. But what just changed, Anthony, is since I was a kid 20 some years ago to today, back then there was 10 whiskeys to pick from. Now there's literally hundreds. Every time I go to a new, high-end bar or restaurant, there's more whiskeys. So is that how this market became so big as it expanded? How did the whiskey market come about?
Yeah, and you bring in some great points, right? Before it was your classic brands, right? There's a few scotches that have been around for hundreds of years. There have been a few extremely historic distilleries in Kentucky and Tennessee that have been around for a long time. But what has really changed is the boom of what we call contract distilling. So it separates the producers from the actual brand, so that say if Matt, tomorrow you wanted to make a 5-year whiskey called Matt McCall, you don't need to wait 5 years and figure out the production side. There are distillers that carry a 5-year aged product where you can do the final blend, where you can do the branding and handle the marketing side. So
wow.
the boom of that has, I think, greatly decreased the barrier to entry for new brands to enter the market. And then we've got not only the aged higher end products, but the RTD, what we call the ready to drink market, where you see these canned cocktails, right? Of Jack and Coke in a can, right? These types of ready to drink cocktails have also really exploded, and they still all use the same base ingredients, which is why you see from the American production standpoint, year over year between 2022 and 2023, the market has increased 30%.
Wow, that's that's a hell of a number. So basically, you can white label it. You can go find what you want and white label it and put my label on it, smack on Matt McCall's distillery, and boom, be out there in every shelf in South Florida, right?
Absolutely, and that's really where Vinovest comes in. We work with these contract distillers, buying up their barrels so that they have the working capital to be able to produce more, and then we'll work with brands on the other side who say, if in 5 years you want a 5-year-old product, you can sign a contract with us today, lock in an eventual purchase price on your side, and be able to know that you have guaranteed production without having to worry about the fluctuations of the market. And then for our clients, our investors at Vinovest, you have a locked in return, right? We have a contract with the brand to know that if you hold this barrel for 5 years, you have the option to sell it at a given price, or you can take it to the open market, test out the market price, or bottle it yourself as the Matt McCall barrel.
Wow. So when you're buying a barrel, let's say, of whiskey, is it a brand then, or it's just a 5-year or whatever it might be, or are you actually owning a specific brand when you get that?
It really does depend. So we offer both options. So you can buy into a cask. So say, a Scotch, an Ardmore or Bowmore cask, right? So that's already the brand. It's going to be that particular name when it comes out and gets bottled. Or you can buy what we call just blank barrels for now, and brands can come and approach us, and depending on what recipe or what formula they're looking for, they can make it, right? So we could sell to a High West, we could sell to a Whistle Pig, could sell to a ready to drink cocktail brand, right? It depends. And both of them have their pros and cons.
That's interesting, because I would think that going into it, I would want to have a brand, Ardmore. I'd love. That's a Scotch I like a nice peaty Scotch. So me thinking of that, I would personally, I'm just saying, me personally would feel very comfortable before speaking with you, knowing I own a good brand that would go up in value, likely. But after you talking about owning the barrel and potentially having some type of contract with somebody to buy it once it ages to a certain extent, that's a very interesting play to it. It seems like it's a very different, actually, investment thesis for those two.
Yeah, you're absolutely right. Right, with the brand, you're really depending on the brand equity, right? Especially with the brand name like Ardmore, right? Ardmore's not going away anytime soon, right? It's like a blue chip, like your Apple or Google or Amazon stock, where it's going to give you steady returns year after year. and you know that there's a certain market price for the Ardmore 18 versus the Ardmore 12, right? If you buy a 10-year-old barrel, you can choose to age it for 2 years or 18 years, right? Whereas the latter, right, being able to sell it to a number of different brands gives you optionality, right? And it also, to your point, is a different investment thesis because it's not reliant on one brand's market positioning. We can be able to have multiple brands bid on the same barrel and also have that fixed supply contract, which in a way gives it almost like a bond-like investment profile where it has, a quote unquote fixed maturity point.
That's amazing. So you said the return on whiskey has been better than wine. Is that just because the whiskey market has picked up with a lot of other spirits? Obviously, again, I'm going to date myself, but going back 25 years ago, when I was legally allowed to start drinking, vodka, the best vodka that for a middle class family like mine was Absolute, and I wouldn't touch that with a 10-foot pole. Now, the best. Or not the best, but one of the better tequilas was Jose Cuervo. Wouldn't touch that. So is it because the entire spirits and you have all these celebrities coming into it? It seems like a really hot time to join kind of the wealthy and the celebrities to get that part of your portfolio.
Yeah, I think you're absolutely right. I think both celebrity brands as well as the sort of craft cocktail movement have all really helped to boost the spirits industry, right? There's a fancy bartender on every single given corner. Before, cocktails used to be very simple, right? 2-3 ingredients. Now you've got 10 ingredients plus smoke plus a hint of this, and they always want to tell you a story behind the bourbon, right? It's this family or this specific way they make it, or it's made very close to where it's produced, right? And I think that's also opened up the market for just craft small batch, and it's opened up, I think, the number of brands that are also able to compete in this market.
So tell me, is there different strategies to take? So if you have a new potential client come on, I was playing with the website today. If you have a new client coming on, is there certain strategies that you recommend for them based on maybe a risk profile they fill out? How do they know where to begin, whether it's wine or whiskey, or how much to put in?
Yeah, so that's a fantastic question. We start every single online journey with that assessment. So we ask you questions like, what is your investment time horizon? That's one of the most important things because certain assets, certain whiskeys, certain wines have different maturity levels, right? So if you're looking to hold something for 10 years, we wouldn't recommend an asset that you may have to just sell 2 years down the line or vice versa. Second of all is investment amount. Right? We've got different barrels, different wines at different price points. And we want to make sure that you're not too concentrated or too diversified within the asset. And then finally, it comes towards education into the asset class. I think, to your point, different types of whiskeys, different barrels, as well as wine versus whiskey, all have slightly different investment theses. And we always offer a call with one of our portfolio advisors for folks who want to dive a little bit deeper, right? Because ideally, we'd like to be able to understand your overall investment strategy, where you see this fitting within your total investable assets, as well as what your deployment schedule over the next year is, because both of these are fairly long-term asset classes. There are different releases that come out different types of year. So it does take time to actually build your exposure into the asset class. We wouldn't necessarily recommend putting all your eggs in one basket on day one. We'd want to deploy you quarter by quarter because there's new releases and new opportunities coming out at different times of the year as well.
So Anthony, tell me, what is the minimum start? Because a lot of people are out there probably thinking, this sounds great, but I don't have $50,000 to throw into whiskey or wine right now. So how low can you start?
Yeah, so the great thing is we've aimed to make Vinovest accessible to a certain extent, right? Our base cost for a barrel starts at $17.50, and you own the entire barrel yourself. That's 350 bottles of whiskey when it all comes said and done. And on the wine side, it's even lower. It's $1,000, and you can get a case or two of wine from a great region like Bordeaux or Champagne or Napa Valley.
So wait, you said $17.50. I had to bring out my calculator here because it is getting late in the day. And a cask, your shred said, right? $17.50 cask barrel. So how many bottles do you typically get out of that?
300, 350, depending on the fill levels.
So 300, that's like $6 a bottle.
Right.
Does that sound right?
Yeah,
Wow.
absolutely. It's crazy low when you think about it, right? Because we're still talking about the bulk supply chain market. And when we eventually sell to the brand, that's when the cost comes in, right? The cost of the bottle, the
Mhm.
cost of the labor. Of course, they need to make their own market with the marketing, and they need to make their margin too. So we're talking about, being able to still earn really healthy margins in this journey of the whiskey while it ages, and still giving on to the end brand to still be able to make their margin at the end of the day.
The first thing that comes to my mind is obviously this sounds great because I think it's a lot of people out there over concentrated on whether it's just stocks or just the U.S. or whatever it might be, and they don't have access to these other alternative asset classes, which the wealthy do. The wealthy have been doing this for a long time. Like you said, anything from watches to bags to booze, they've been doing it, and it's great that now there's access for the average person out there. But that I have a second thought that pops in my mind, Anthony, and that is, well, get my five friends together. You split it up. $350 each. We each get 60 bottles. Those are great Christmas gifts. Give those away for Christmas. It doesn't cost me that much. Like I'm going to spend on five times that if I get a decent bottle at the liquor store to take to a Christmas party. Now I get to put the Matt McCall label on that, and they get to sit, gets to sit on their shelf there. That's pretty neat. That's another way, I guess, to look at this.
Yeah, and we
Um,
do have some folks who, they're like, hey, maybe I'll buy 10 barrels to invest, and a couple barrels for myself, right, or for my kid, right? We've got
yeah,
a few folks who have barrels that they bought for their kid's birth year or for an anniversary with their partner, right? And on some sort of special occasion, they'll bottle it, they'll brand it, and it becomes a sentimental piece of, piece of
that's really
family.
neat. That is neat.
Yeah.
So real quick with the wine. Oh, but actually, before we leave the whiskey, my producer and you and yourself, Anthony, convinced me to go pour myself. I don't carry alcohol in my house typically, but I happen to have a bottle of tequila. So I don't have whiskey or wine or anything, but I have a little tequila. So cheers to you for coming on.
Cheers indeed. Took a lot of kicking and
Um,
screaming to convince you.
it did, people, folks. It did take a lot of kicking and screaming. I think I was out the door of the studio before you finished your argument, but
Yeah.
it is. We are taping this to be fair. It's 5:30 p.m. on a Friday. I'm packing, doing laundry, and I have a flight at 6 a.m. to Nicaragua, my house there. So I deserve it. I think I've had a busy week, but when it comes to wine, I see wine bottles behind you. Is it similar? Do you buy a barrel of wine or are you buying certain bottles? Because I think with wine, I would feel more comfortable knowing that, this is the winery I want to be invested in.
Yeah, you're absolutely right. So on the whiskey side, we exclusively invest on the barrel side because that's where the maturation happens. Once it's
Okay.
bottled, the whiskey is pretty stable, right? The taste profile doesn't really change. With wine, that's where all of the taste profile happens, is in the bottle, right? So all of the wines behind me, we buy the ones when they're actually out of the barrel into the bottle, and that's when they mature, right? They've got a vintage year, they've got a date, and we know that based on the average sort of maturity windows of the vintages before that, what we could reasonably expect to sell it for, when we could reasonably expect to sell it. And in terms of the wine market, it's also a much larger market globally, about 3 times the size of the whiskey market. So there are larger liquidity opportunities, even though it is less returns all said and done.
So don't tell specifically where this is because we don't want people looking for it. But where is this housed? Because I mean, playing devil's advocate here, a lot of people will say, well, how do I know this even exists? Like, how do I know that I have my cask over there or my 30 cases of high-end wine? Like, how do they know that they're there?
Yeah, so we have a lot of our wine facilities in Europe where the wine is sourced.
Okay.
We source primarily from France and Italy. So we have a warehouse in France. We have a warehouse in UK, which is a global trade center for wine. And we also have a warehouse here in Napa Valley. On the whiskey side, right, we've got a warehouse in Scotland for the Scotch. We've got a warehouse here in the United States for the American whiskeys. And because we have direct access to the assets, our investors can actually visit the facilities at any time, right? So that question, hey, this is all great, but you're an online platform. I'm investing in a real thing. Can I actually go see my wines or my barrels? And that answer is yes. So this summer, we've taken a few of our clients out to Scotland, and a few of our clients are coming out to France in October. So it's always cool to be able to connect for an investment in a very real way, right? Imagine getting invited to the Tesla factory just because you owned enough shares of Tesla or something like that, right? There's a fun experiential component that you get with wine and whiskey that I think you can't really achieve with other asset classes. So we want to play into that, right? Because I know for a lot of people, it's also a passion.
Mm-hmm. Yeah, I mean, I love that because this is something that, like I said, I just did a deep dive today before having you on a show, and it's something that there's probably 9%, 95% chance I'm going to do this. And to me, it's a diversification tool for my portfolio, which my entire business is based around the stock market. So it's a nice diversification tool. And knowing that I can go visit potentially my scotch in Scotland is amazing to me. That's a really neat thing because I've delved into other types of alternative investments and like, no, it's in a vault. You can't see it. You can't see it. That always scares me. I want to be able to see what I own. I mean, at least send me a picture if I can't make it to Scotland. I want to see what I have. I think that's really important that you do that.
Yeah, couldn't agree more.
Yeah. So before I let you go, any last words here? I know obviously your business has been growing dramatically. I saw the numbers. Congratulations on that and to your team. But any last words for people out there that may be thinking, investing in booze doesn't sound like the greatest thing?
Yeah, I think, even for folks who don't drink, right, this is an asset, right? For me, the wines and whiskeys I invest in, even though I am a consumer, I keep them 100% separate than the things I plan on drinking. So I think that sort of mental separation is important. And then also just from a fundamental level, right? Even if you don't understand the brands, even if you don't like the taste, right? The fundamentals are strong where it changes as it gets older, it appreciates as it ages. You can't go back in time and produce more. And every single bottle of wine or whiskey consumed at the dinner table is one less bottle that's taken out of the market, right? So to me, those fundamentals make a whole lot of sense. And I think starting with there can give you the best sort of, groundwork to be able to make an investment thesis out of it.
Yeah, I mean, it comes down to, I talk about a lot in the show and for my subscribers and my newsletters is a lot of things in life and in investing comes down to very simple economics 101, supply and demand. Yep. And in a situation like this, when supply will be dwindling because people will be drinking this stuff and it's not all being invested and put away into a warehouse, your supply is dropping. And if it's something that there's a demand for it, simple economics tells you price is going higher. I mean, I don't need to be a math genius to figure that out. I mean, it tells you price is going higher. And you talk about historical numbers over the last 10 years, which are, it's not like we're looking at 1 year where it had a nice run up. And this is something, again, Wall Street Journal's talked about this, talked about art, talked about watches, all types of things. For decades, they've been writing about this stuff. So do your history if you're interested out there by watching the show, because this is, I agree with you, Anthony, it's a true asset class. So yeah. I'm going to see you in a couple of weeks out in Vegas at our Stansberry conference. I think it's sold out. So if you want to go online, and I think, Anthony, you have a presentation there where you'll be speaking. So yeah. So anybody out there wants to see Anthony or me, I'm on stage like way too much. You may be sick of me actually, but don't worry. I have some new things I'm going to talk about. And Anthony, I look forward to sitting down with you and enjoying a drink with you while we're out there in Vegas. Because exactly. It's well-deserved after a long day out there of us working. We're going to sit down. We're going to have one. But hey, man, great for having, great for coming on. It's your first time, and hopefully we get you back in the future and talk about your company's successes and any new ventures you guys jump into in the future.
That sounds great. Thanks so much for having me on today, Matt. Really appreciate it.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.